Hi guys, good morning. It's your Sir Kevin O again, and today we will be talking about consolidated net income in our discussion with business combinations. So I have here a problem for you. It is consolidated net income where the parent uses equity model. Later on I will be illustrating as well when the parent uses cost model. Pero this is a discussion about consolidated net income without intercompany transactions. Okay, wala pang intercompany transactions to, so let's get to this. First, let's have a little background. The parent and the subsidiary, they are actually treated as one economic entity. So their operations must be presented or reported together as one. In the same manner as reporting of assets and liabilities. Pareho din yung balance sheet ni parent at ni subsidiary, when we report them, they should be combined into one consolidated balance sheet. As we have discussed in our date of acquisition consolidation, But this one, our concern here is combining the income statement of the parent and the subsidiary. But we will not actually be preparing the income statement yet. We are only going to compute consolidated net income. So, dito. Okay, so let's get to this problem. As I mentioned earlier, ang required po sa problem na to is compute the amount of consolidated net income to be presented in the December 31, 2020 consolidated income statement. So this problem is a little bit similar to the previous illustration that I gave. Well, technically speaking, yung given niya is almost the same, pero yung pinagkaiba lang is the requirement. So here is our problem. Roger Incorporated acquired 75% of the ordinary shares of Shanks. So Roger, 75% owner of Shanks on January 1, 2020. At the date of acquisition, the only assets of Shanks whose fair value were different from the carrying amount were the following. Okay, make note of this guys kasi itong mga over and under valuations, the difference between book value and fair value, it might affect our consolidated net income in a way in the form of amortization. Okay, so inventory, meron tayong konting undervaluation kasi book is lower than fair value. Building, there is also an undervaluation. So, eto po. Inventory, if it is sold during 2020, magkakaroon ng impacto in our cost of sales computation. If it is sold during the year. Kasi take note, this is inventory of January 1. That's beginning inventory. So, building net, ang ni-record is 1,200,000 in the books of Shanks, pero the fair value is actually 1,350,000. Dinidepreciate siya at 1,200,000, but the fair value should be 1,350,000. Their difference will also be depreciated in what we call amortization. Okay? Amortization of the overvaluation or undervaluation of this building. But this time, this is an undervaluation kasi po 1,200,000 versus 1,350,000. Equipment, 600,000 and 500,000. Now this one is an overvaluation. This is overvalued by 100,000, and that will also impact the amount of depreciation expense recorded on the equipment. Ito lang ang kailangan mo tandaan. Sobra ang asset, sobra ang expense. Okay? Dito, equipment. Kulang ang asset, kulang din ang expense. So the impact to the net income consolidated will be likewise the same. Now, know that the building and equipment had remaining life of 5 years and 10 years respectively. So building, 5-year life, and equipment with a 10-year life. So let's just mark them so that we know. The undervalued inventory was sold by December 31, 2020. So yun na nga, itong inventory na to, it was sold within December 31, 2020, which means that it will have an effect on our consolidated net income by way of cost of sales. So, dito, the next given are the two separate financial statements of Roger and Shanks. The income statement, to be more particular. Condensed income statement of the two. Dito, parent and subsidiary are actually considered one economic entity, di ba? Fundamentally, in consolidation. Pero do take note guys na even if the parent has already acquired 75% or even 100% of subsidiary. This time, even if Roger owns 100% of Shanks, let's say that. Roger and Shanks will still maintain separate records. This is fundamental in business combination, and I think I need to remind you of this. Si Roger and si Shanks, magkaiba yung record nila, magkaiba yung libro nila. Which is why, when you would solve a problem like this, normally, dalawang financial statement ang pinapakita kasi po, although they are economically one entity, when we are talking about books and legal identity, magkaiba po si Roger and Shanks. Separate. All you have to remember is the accounting records of Roger and Shanks are separate, which is why their financial statements are separate. Now, your job is, ikaw, accountant, at every reporting period, you will have to make sure na i-combine mo ang financial statement ni Roger and Shanks to make the consolidated financial statement if you are the accountant of Roger. Okay? Kasi po, si Shanks hindi naka-record sa libro ni Roger. Gagawin mo to in every reporting period. So, December 31, 2020, you will have to make consolidated FS. You will be presented with two inputs, the financial statement of Roger and the financial statement of Shanks. Pagka next year naman, you will have to do this over again. Kasi po, the preparation of the consolidated financial statements is not recorded by Roger. It is simply for reporting purposes. So, when 2021 comes in, Roger will still continue to record his transactions separately from Shanks. Hindi po nila i-combine ang books nila. So, in every year, kailangan natin gawin ang consolidation. Okay? And every year, we will be given with two separate financial statements. Just like this. So, enough about that. Let's go to the objective of the problem. Consolidated net income. Okay, you have here the two income statements. Now, consolidation works in a way na i-combine ko ang dalawang financial statements na to, di ba? So, the goal really is, if I am going to prepare the consolidated income statement, ang gagawin ko sana is, i-add ko ang sales, i-add ko ang revenues, i-add ko ang cost of sales, and then i-add ko ang expenses. Everything will be equal to my consolidated balance na if there are no other elimination entries. Yun sana. Pero since ang tinatanong dito is only the consolidated net income, we do not have to go through adding individual figures of the financial statement. Okay? So, pag consolidated net income po ang tinatanong, ang una mong hahanapin is net income. Dalawang net income. Roger, the parent, and Shanks, the subsidiary. Kasi technically speaking, consolidated net income is net income of the parent plus net income of the subsidiary. Yun lang naman yung required, di ba? Hindi ka naman nire-require na mag-prepare ng consolidated income statement. So, dito ka mag-umpisa. However, here is an important point of emphasis that we will have to consider. Lahat po ng income na maipipresent in our consolidated net income must be income that is only of external sources. Which means, kailangan po natin tanggalin ang intragroup and intercompany revenues. Like for example, si Roger as the parent company of Shanks accounted for the investment at equity method, which is why si Roger po, by the end of the year, nag-report siya ng income from subsidiary by way of computation through equity method. And take note that this income is coming from Shanks. That income is actually a portion of the net income of Shanks. Kasi this is the share in net income of Roger in the operations of Shanks. So, the first thing that you will have to do if you are going to prepare the consolidated financial statement is you have to add all the income of the parent and subsidiary minus any intercompany and intragroup revenues. So step 1, preparation of the computation of your consolidated net income. Ito po ang gagawin. Take parent's net income. remove income from subsidiary because it is an intra-group revenue. After doing that, you will arrive at an amount equal to the income from own operation of the parent. Tapos, what you will have to do now, since this is already the income of the parent in his operation without investment income, 750, i-add mo ngayon ang subsidiary net income. Ito na ang magiging total profit of the parent and the subsidiary. Okay? Yan ang total profit natin, but that is not yet the consolidated net income. Relax tayo dyan. 1,050. Step number 1, eliminate investment income. Then add income from own operation and subsidiary net income. Let's go back to the problem. So, nakuha mo na ang total profit ng dalawang parties. You will now have to look into the problem and see if there are any over-under valuations that might affect the expenses or the revenues. Review lang. On the date of acquisition, January 1, 2020, these assets were found to be overvalued or undervalued. So like for example, itong inventory na 500, 575 pala ang fair value niya, magkakaroon yan ng impact sa ating cost of sales. You may ask, why sir? Okay, January 1, 2020, Shanks, di ba? Shanks, that is your beginning inventory. Sinama mo to in the computation of your cost of sales. Right? So when you prepared the financial statement, you use this as part of cost of sales, and when you computed for cost of sales, nakuha mo is 800,000. Pero in consolidation, lahat ng assets ni Shanks dapat naka-record at fair value. In his separate books, naka-book value yan. Books ni Shanks. Pero in consolidation, lahat ng assets ni Shanks and liabilities, they must be recognized at their fair value. So ang inad mo is only 500, pero for consolidation, dapat ang beginning inventory mo is 575. That means, meron pang 75,000 na kakulangan in your computation of the cost of sales. Which is why this one will have an impact in your net income consolidated. Kasi hindi mo na-record ng maayos ang inventory mo according to its fair value. Ikaw, Shanks. Okay? So in the end, itong tatlong over and under valuation na to, we will have to analyze their effect to Shanks' net income. Just like how we computed our income from subsidiary, yung consideration ng amortization, it's actually the same concept here. And when we finally get to the amortization computation, it should look like this. Step 1 ha, kunin mo, eliminate investment income and then add income from own operation of the parent and subsidiary net income. Step 2 naman, determine the amortization of over and under valuations. So I have here a table for you. Una, cost of sales coming from inventory with book value and fair value. This is our given earlier. And it is actually undervalued by 75,000 kasi mas mataas ang fair value natin. 500 minus 575. Dito naman, depreciation of the building, 1,200,000 and 1,350. Mas mataas ang fair value. Well, actually, to be more precise, pwede mo i-interchange to. Kasi 1,350 minus 1,2, that is a positive 150. So, positive 150 depreciation yan ng building, related to. Ang dinepreciate lang is 1,2. So, ang depreciation ni Shanks, 1,2 divided by 5 years, depreciation na ni-record ni Shanks is only 240. Pero the actual depreciation for consolidation should be 1,350 divided by 5 years. Dapat 270. 270 minus ang ni-record niya is only 240. Dapat magkaroon pa ng additional na depreciation na 30,000 as computed here. Or, you may simply compute it as follows. 1,350 minus 1,2, you get 150, di ba? Itong difference nila, simply divide that by the number of years of depreciation for the building or remaining life. 5. 30,000. As simple as that. Ikaw naman equipment, what happened with you is, nagsobra ang pag-record sa'yo. So, ang ni-record na amount is 600,000 when in fact the fair value is only 500, nagsobra ka ng depreciation. And the overstatement is equal to 100,000. So sobra ng 100,000, dinepreciate to over 10 years, divide natin by 10. For 2020, merong sobra na depreciation on the equipment of 10,000. So what we will have to do is, i-adjust natin ang net income ni subsidiary, ni Shanks, by these figures. Okay? Or we can simply do it like this. Step number 3. Adjust for amortization. The first part is taken from step 1 dito. Andito naman ang step 2 natin. And then, of course, to finally compute the computation for your consolidated net income, you will need to adjust your total profit with what you computed earlier. So let me explain them individually. Total profit, 1050. This is simply parent plus subsidiaries net income without adjustment for amortization. Of course, less income from subsidiary. Amortization. Inventories. This is understated inventory. So let me tabulate. Understated inventory on January, understated beginning inventory, di ba, Shanks? So kung understated beginning inventory, understated din si cost of sales. And when you understate your cost of sales, your net income, Shanks, will be overstated. So this is actually an overstatement in Shanks' net income, subsidiary net income. So what you will have to do is adjust it by a deduction. Ito naman, understatement ng building. Understated building, understated depreciation. Overstated income. So kung overstated ang net income ni Shanks, minus ulit. Nothing to it. Ito naman, sobrang equipment. Sobrang equipment, sobra din sa depreciation in the books of Shanks. Well, we will have to make sure na maging congruent to our fair value. So since overstated ang depreciation, the impact to the net income of Shanks is an understatement. So, sobra expense, kulang income. 300,000, sobra yan by 10,000. In the end, you adjust this total profit with the amortization coming from the acquisition date. Ito acquisition date, under and over valuations to. Consolidated net income for Roger and Shanks' consolidated financial statement will be 955,000. Okay, so that's your consolidated net income. However, income statement, consolidated the problem actually does not end with consolidated net income when you are dealing with consolidation of the financial statements. Kasi IFRS 10 requires that the portion of the consolidated profits meaning ito, consolidated net income natin, that relate to the parent must be presented separately from the share in profit of non-controlling interest. So ano daw? Kailangan i-separate mo ang consolidated profit that relate to the parent's equity from that of the profit of NCI. Okay. Parent's equity and then NCI. The presentation of result of the group's operation does not end after consolidated net income. We have to present what part of the income will accrue to the equity of the parent, known as profit attributable to the parent, and what part of it is non-controlling interest income. So ikaw daw, consolidated net income, what part of you will go to the parent and what part will go to NCI income. Consolidated net income will be divided as follows. Profit attributable to parent and NCII, which is our requirement for this additional requirement set. Using the same illustration as above, compute profit attributable to parent and NCII. Okay. Actually, ang computation natin sa PAP and NCII is derived from the same computation of consolidated net income. Pero background lang dito. Profit attributable to parent and NCII. Ano nga ba to? So to illustrate properly, imagine that this one is the parent's net income and this side is the subsidiary's net income. Also note that the parent owns 75% of the subsidiary. The remaining 25%, that is owned by NCI. So by way of common sense, we can conclude na lahat ng net income ni parent will accrue only to controlling interest. Alangan naman mag-share si NCI sa income ni parent, no? Hindi po. Kasi si NCI is simply a component of the subsidiary. And at that, NCI is only 25% of the subsidiary. So kapag nagkaroon ng sharing ng income, NCI will only share 25% of the subsidiary's income. The remaining 75%, that is controlling interest share. In short, the highlighted blue area, that is your profit attributable to parent. And then this orange area, that would be what we call the non-controlling interest income. Okay, so let's compute NCII and profit attributable to parent. So based off of this computation in consolidated net income, maaari nating ma-divide ang profit as follows. So let's consider this one as the consolidated net income column, or it is the 100% column. Kailangan i-divide ko ang items dito as either controlling interest 75% and non-controlling interest of 25%. Alin yung property ni parent and alin yung i-share with NCI. So, parent's net income, less income from subsidiary, eto income from own operation of the parent. Yang income from own operation of the parent, it will be exclusively owned by the parent, as in the earlier illustration. Ito kasi yung income of the parent in his own operation, not including the subsidiary's operation, of course. Whereas, ikaw subsidiary's net income, subsidiary, alam natin na si subsidiary is owned by parent, 75%, and then 25% NCI. So, ang 300,000 na to, it will be shared between the parent and the subsidiary proportionately. So, 75% of 300,000, 25% of 300,000. Total profits, whatever you can compute here, i-add mo lang pababa. I-add mo lang dito pababa. That would be the profit before amortization of the parent and the NCI. So now, amortization. Eto, whose inventory is this? Let me ask. Di ba yung inventory na yan, that is the subsidiary's inventory? If it is the property of the subsidiary, that means that it will be shared between the parent, share, controlling interest, and the non-controlling interest. Ang building din, that is the property of the subsidiary, it will be divided between controlling interest and non-controlling interest in a 75 to 25 ratio. So 30,000 times 75%, 30,000 times 25%. Likewise on inventory, 75 times 75, 75 times 25. And lastly, yung equipment natin, well, it follows the same thought process. Controlling interest and non-controlling interest will share kung ano ang amount na nandyan. Kasi po, it is owned by the subsidiary, so it is just right to share them between controlling interest and non-controlling interest. So in the end, ang kailangan mo lang po gawin if you are computing for the profit attributable to the parent and NCI, you will have to derive that computation with what we have in the computation of the consolidated net income. If you do this correctly, allocating 75 and 25%, you will have a solution that looks like this. Ito po ang consolidated net income. This is our solution earlier. And profit attributable to the parent is simply adding income from own operation exclusively to the parent. Of course, NCI, wala kang share dyan, wala kang kinalaman dito. This is the parent's own income. Subsidiary net income, the 300,000 is divided between PAP and NCII. Total natin dito is 975. Dito naman, 75,000. Undervaluation of inventory, 75,000 is simply multiplied by 75%. Makukuha natin ang share ni PAP, 75%. NCII naman, whatever remains, the 25% of 75. And for 30,000 and 10,000, you do the same. Okay? And do take note, if it is a deduction in your consolidated net income column, all you have to do is multiply that by the controlling interest and non-controlling interest, then you will get the share of profit attributable to the parent and NCII respectively. So yan po. Conclusion notes, the profit generated by the subsidiary is divided proportionately by the parent in a CI to NCI ratio, 75-25, just like what we have been doing. The amortization is also proportionately divided 75 to 25 since they relate to items affecting the subsidiary's income. And needless to say, IFOP or income from own operation of the parent accrues only to the parent. Okay, so that is a lot of words. Sorry if I talked a little bit fast, pero you can just pause the video again if you would like to read through the information and confirm your computations as well. Additional illustration, guys. What if the parent uses cost model? So guys, itong problem na to, it is actually the same given as our previous problem. Ang ginawa ko lang po is kinonvert ko lang siya into cost model by changing the accounting method used by Roger. So, iha-highlight ko lang kung alin ang naiba dito ha. Dividend income lang po. All other figures of cost of sales, sales, depreciation, and all amortizations are the same. This is just to show you ano lang yung pinagkaiba ni cost method from equity method in terms of net income and the sharing, of course. So, yun, dividend income. The difference in the computation is like this. So, ito po. Consolidated net income column. The parent's net income is now 870. That is because nagkaroon ng difference in the total profits, gross revenues, I mean. So, everything else, although everything else is the same, nagkaiba kasi sa dividend income. So, magkaiba yung figures with cost method and equity method. But rest assured, ito lang yung nabago talaga. Parents' net income, income from own operation is still the same. And from that point onwards, everything is actually identical to equity method. Ano lang yung pinagkaiba nila? Itong dalawang rows lang. Okay? You can pause the video anytime. But then again, let me show you the analysis and comparison. Compare this solution to a preceding illustration on PAP and NCI computation. Notice that the only difference between the illustration is the first two items, P&I and IFSDI. Ito, dividend income instead of income from subsidiary. The allocation of the subsidiary's net income in both PAP and NCII are identical between cost and equity method. Look at this. 903,750, 51250. Let's look at our previous illustration. 903,750, 51250. Take note, this is already the illustration on equity model, ha? Going back. The only difference is in the parent's net income, where the parent recorded either income from subsidiary or dividend income. Dito lang magkakaroon ng difference, guys. Okay? So, between cost method and equity method, if the question is consolidated net income, you will follow the same 3 steps. Step number 1, eliminate income from subsidiary or dividend income. And then add together subsidiary net income and then income from own operation. Dito. This is step number 1. Step number 2, determine mo ano ang amortizations. And then by doing so, step number 3, i-compute mo na lang pababa ano ang effect ng amortizations na to your consolidated net income. And that's already your consolidated net income. If required yung profit attributable to parent and NCII, all you have to do is make two additional columns and do the sharing of 75 for all items that relate to the subsidiary. And make sure na ang IFOP mo, income from on operation of the parent, is only on the column of PAP kasi wala namang kinalaman dyan si NCI, di ba? So, that's all for this video, guys. If there be any questions, do post them in the comments down below. And I will be making another video on related to consolidated net income ha, pero gagawin natin is consolidation process na in our next video. Till then, guys, I will leave you with this and I will see you again. Thank you for watching and have a great day. Bye-bye.